Session forward. Bala, last Friday this market gave everyone a hope that things have bottomed out. What's gone wrong today? Between yesterday and today, nothing has changed. Asia had stabilized. We were looking up till about 1:30, and then now the selling stampede has started. What has the world discovered post 1 o'clock, which is causing so much of panic that the Reliance is down 4-5%, ICICI Bank is also down 10%, and we've gone below Friday lows?
I think, Nikunj, while the last, few weeks, the reaction has been continuous on the back of the one is virus and second is kind of oil price dropped. I think now as the time progresses, I think we're also discovering that how these various sectors are getting impacted because of the quarantine and restrictions on travels and other things that are being put in. That seems to be affecting the performance of companies. And also the Fed rate cut, now we almost brought it down to zero, also means that probably the economic growth is going to stay a little low for a longer period of time. And is also now putting a question mark in terms of how the margins of banks and other things will be maintained. A lot of question marks are coming. I think there's so much of travel restrictions means that there's going to be a loss of revenue for airline industry, and there's going to be a loss of revenue on tourism. There's going to be a loss of revenue on various companies who actually run their own shops in various malls. And these are some of the questions that are coming in, that how long it's going to have an impact. Initially, of course, people ignored that, yes, 1 quarter's drop in profit is already discounted on the price. But it's difficult to assume that whether it is 1 quarter or 2 quarters or a prolonged recession that one can witness, given the fact the interest rates are being brought down to zero. And that's the way I think the market is reacting. I think it's coming largely from the way I think US fell, and then subsequent fear that is coming in on the fundamentals of the companies. While fundamentals of the companies are good, but the high valuations of companies are also now getting corrected.
So Bala, I have a simple follow-up question. Global markets corrected 50 to 60% in 2008. The situation right now is even dire than 2008. So what stops this market from correcting another 20, 30, even for 35% from here?
See, one of the things that, Nico, I think it's of course good observation that why it can't fall further. I think one of the fundamental change seems to be coming from normally we don't look at the chart when the prices are high, when the market is trading at a high premium, which is the earning yields versus the bond yields. And today, if you look at it, the bond yields have come down quite significantly, though they are at risk from a credit spreads which can widen if there is a slowdown and there is a lot of revenue. Having said that, the earnings growth, assuming scenario remains where they are anywhere between 10 to 12%, the earnings yields of Nifty is now coming a little higher than even the bond yields. So probably somewhere the time will come where further downside from here, as the earlier the speaker mentioned about the 8,600 can probably be tested. I think as we come closer to the level, probably you will see the earnings yield of Nifty becoming more attractive, especially at them, and the bond yields there's nothing much to earn from the bond yields, and therefore it could potentially become an attractive for people to just come and buy at those levels. Maybe the long only guys who have deep pockets can even reverse the game. It doesn't take much time for people to find at some level attractive for the market to pump in, and then they start pumping in money. As it has fallen so sharply, which I've never seen in the past, can also give an equal bounce back once that gets established.
So Bala, we've not heard from any company right now, and frankly that's the right thing. The companies right now trying to protect their employees, work at home has started. Nobody has been able to assess the real impact. The economy is frozen, financial markets are frozen. My whole point is that in a time when things are just unwinding with so much of pressure, why do you think one should be buying stocks right now? What is the valuation matrix which will work right now? Because we don't know what is coming next. Is it a 5-day closure? Is it a 2-week closure? It's a 3-week closure or a 1-hour closure?
Yeah, I think that's something which, of course, while it's really difficult to make that judgment as to how long this will last. Of course, there are different feelers are coming that this may probably stay for 1.5 months and then gradually it will die down. But in the meantime, what the potential loss that could come on both on top line of various companies as well as the bottom line. So having seen that, of course, the market generally tend to react a little ahead of time. The knee-jerk reaction that has come, loss of 30% value the last 1.5 months. That reflects the severity of the impact of various companies and earnings. So therefore, any gradual good news that comes in, even in the form of the number of cases that related actually has been going down, and then life is coming back to normal. As we start hearing this kind of the news, probably the equal amount of bounce back would also come. Therefore, having seen both the sides, I think one should also assume that such a sharp fall can also be considered as that providing an opportunity to look at buying opportunities. So that's the way I look at it. Though it's difficult to call the bottom, definitely it's something which I think one should just keep that in mind.
Maniam also joining in with us. Sunil, thanks for joining us. Just, assess the situation at hand. We haven't reached a case of complete capitulation, and it's very hard to predict a bottom at the current levels, but it certainly seems that it's a long time before we actually get out of the woods. Would you agree?
No, actually, if you look at it, I think the situation has come to a stage where the fall is now more a sympathetic fall to the US markets. I don't think this is correlated to domestic economic situation. Now, if that were the case, you would find that clearly those sectors which are going to get impacted domestically should be correcting far, far more than those which are not going to get impacted. But you're seeing an across-the-board sell-off. So to me, this is a kind of a sentimental negative thing, backed by the fact that there is money flowing out from ETFs, which is naturally flowing out from emerging market equities. So I believe that when a little bit of sanity comes back, India would be in a better position, and that time is when you would actually see those sectors which are going to be less impacted. And still we are in early days to really know the impact of this, because all this work from home, shutdown of malls, entertainment complexes, how far it's going to impact. So I think yes, there is still a bit of uncertainty in lack of clarity. But also remember that in all this time of FIS sell-off, domestic mutual funds are continuing to be buyers. So I think fund managers have a clear sense that from a 3-year perspective, 5-year perspective, which are the companies likely to do well, and are probably accumulating them on the declines which have happened. So
Kunal, you were making a point earlier. Let's just recap that, because we're now at 8957.
So yeah, the fact that sentiments have got back to a new low. Prices may not hit a new low, but sentiments are the first